This is a presentation about Canon Corporation where I will examine and critically evaluate the corporate governance of the company, the way it engages with socially responsible investments. An evaluation of investments for value creation will be discussed with a presentation of a theoretical example. The company was founded in Japan in 1937, where current headquarters is. It operates globally and specializes in the production of optical, industrial, and imaging products such as lenses, cameras and medical equipment, scanners and printers. It's listed on Tokyo Stock Exchange and has a secondary listing on the New York Stock Exchange. The company operates in four business units. Office business unit, where it expects an increase in the demand for devices that will enhance operational efficiency. Imaging business unit, medical business unit, industry and other business unit. Kyosei as a main corporate philosophy is literally translated as inspiration to create a society in which all people, regardless of race, language or culture, harmoniously live and work together for the common good into the future. By practicing Kyosei, Canon establishes harmonious relations with its customers, suppliers, competitors, the governments with which it deals, and the natural environment. Furthermore, at Canon, there are no distinction between factory and office workers. Everyone is a sha-in, which translates as a member of the company. As I find it very interesting and as it is the core of the company, I will provide some examples that what can be achieved by adopting Kyosei with practical examples from Canon's strategy and operations. The first example is that it can influence trade imbalances. For example, Canon situates its factories in countries with which Japan has the largest trade surplus. It has located its factories in the United Kingdom, France, Germany, and the USA, and as a result, it has reduced the Japanese imports to those countries. It can impact income imbalances by building plants in developing countries to reduce the imbalance between rich and poor nations. Many of its factories are in Southeastern Asia. The company implemented an innovative project in 21 countries where it recycles the cartridges from its photocopies and laser copies. By doing this, it finds a way to reduce air and water pollution. Finally, the company has established trustworthy partnership agreements with its competitors, which otherwise would have been missed. According to the OECD, corporate governance aims to create an environment of trust, transparency, and accountability, which strive to foster long-term investment, financial stability, and business integrity, supporting the growth and inclusiveness of societies. Moreover, the better the corporate governance of a company, the more attractive it is for investors because it makes the investors think their interests are protected. The corporate governance policy of Canon strives to create value. To do this, it's effective to increase the management transparency and strengthen the supervision functions of the management. Here comes again the corporate philosophy, where every single person in the company, from employee to an executive, has a sense of ethics which is crucial for the successful corporate governance. The company adheres to the Japanese model, where the board consists of directors who spend their life in the company. There are 6 members of boards of directors, 2 of which are outside directors, and 38 executive directors who make decisions and execute operations of each business field or function. The reasons for being only 2 outside directors is that most of the companies in Japan find it difficult to incorporate how an outsider can make decisions for a company that he is not part of. A criticism for the number of the executive directors could be the fact that it can hinder the segregation of duties process. Moreover, the CEO and the chairman are the same person, which is a predisposition for a financial fraud. Another characteristic of the Japanese model is that the company considers all the stakeholders equally. It considers every single group when making decisions. Therefore, a good balance should be found to avoid conflicts of interest. However, it is a difficult approach because what benefits one group may disadvantage another one. Moreover, the interests of the groups vary. Nevertheless, it's important to distinguish directors' accountability from their responsibility. Additionally, Canon has acquired Toshiba Medical Services in 2016, which will be discussed later in the presentation. However, the way it acquired it caused an accounting scandal, and as a result, both Canon and Toshiba paid $2.5 million fine. The reason was that the companies find a way to conduct the deal before the year end of the financial year of Toshiba to recognize the process proceeds by avoiding 30 days periods where the deal should be approved. This is a visual representation of the corporate governance structure of the company. The general meeting of shareholders elects or dismisses board of directors, accounting auditors, and audit and supervisory board. The board of directors cooperates with the company committee and representative directors, but the interesting point is the function of the audit and supervisory board. This board is independent and it oversees internal audit operation. Its main objective is to make management more efficient. Generally speaking, the role of board of directors is related to the strategy and direction of the business. However, this framework explains visually the role of board of directors. For example, in 1974, a general review of the company was made, and then it was decided by the board of directors that the company should adopt Kiyosei philosophy. Moreover, in 1996, a global excellence plan had been developed for the next 25 years, finishing in 2020. This plan oversees changes in industry and shifts Canon orientation from business to customer to business to business. As a result of this decision, the board actively engages in policy making, which is crucial for the smooth transition. Additionally, the corporate structure of the company has been changing. For example, the number of directors have been reduced from 17 to 6, and in 2014, outside directors were appointed. Recently, nomination and remuneration and advisory committee have been established. Evaluating board effectiveness is a process that the company annually conducts. For example, it makes surveys about board's performance and effectiveness. Moreover, for newly appointed directors, the company provides long trainings to properly fulfill their duties. Additionally, annually, the company provides the opportunity for the directors, the management, and the rest of the employees to attend trainings at the expense of the company. Furthermore, the company actively engages with a dialogue with shareholders, as it believes the communication is a key principle for effective management. Therefore, it organizes conferences, interviews, and meetings. In terms of committees, the Corporate Strategy Committee deals with the overall corporate strategy of the whole group, where independent directors can participate and express external opinion as a third party. The Risk Management Committee is subdivided into Financial Risk Subcommittee, Compliance Subcommittee, and Business and Management Subcommittee. The overall duty of this committee is to ensure the effectiveness of the risk management policy of the group. The Remuneration Committee consists of the CEO and the independent directors. The role of this committee is to ensure the proper remuneration for directors. Social responsible investment is an approach adopted by companies which strive not only for financial return, but they strive to make investments for good cause. A fact worth noticing is that the amount of socially responsible investments in Japan has increased by 300% between 2016 and 2018, stimulated mainly by the government. It encouraged companies to engage more in social investment by example. To do this, the Stewardship Code and the Corporate Governance Code were reviewed. Moreover, two major institutions became signatories to the Principle for Responsible Investment to promote awareness of SRI. However, the corporate community in Japan needs to access high-quality information about sustainable investing. The benefits of it are supported by the government to boost the SRI. In order to increase the awareness of sustainable investing, four dimensions have been discussed by SPF. It recommends that the SRI should be made more visible to the general public. There should be more and sufficient evidence about why to engage in this kind of investments, what policies should be implemented by the government to place the action, and additionally tools should be provided to investors as practical guidance. ESG framework is the way in which the company incorporates the environment, society, and governance in its operations, while SRI relates more to the type of screening conducted by investors, whether the company makes it even better when operating and investing. Canon has a strong ESG framework. For example, in terms of environment, it strives to reduce the externalities with a focus on the entire production process. It contributes to a low-carbon society and eliminates hazardous substances, hence prevents pollution. About the society, promotes diversity and cultural events. Moreover, it strives to maintain a sound corporate governance. The core principles of the corporate social responsibility is again the philosophy of Kiyosei. Additionally, it has responsibility about product quality, safety, environment, compliance information, security, and employees. NPV and IRR are discounted methods which are used for investment for value creation. As a general, the investment for value creation can be defined by earning revenue or return on capital that exceeds the expenses or the cost of capital. Moreover, it considers the financial, social, and environmental value of the company in the long run. The main principle of NPV and IRR is to account the cash spent for the investments as well as the expected return. Both of them consider the time value of money. NPV is the difference between the present value of cash flow and present value of cash outflow during a period, while IRR estimates the profitability of an investment. Discount cash flow analysis is appropriate for multi-period investments, that is, where the expected benefit and cost do not all arise within one period. One of the disadvantages is that they are based on estimates. There is no 100% certainty that the investment will generate the expected return. Moreover, for the IRR, there can be more than one rate, while NPV doesn't have this disadvantage. As a general, there are a lot of uncertainties. Sensitivity analysis show how NPV behaves when one assumption is changed while others are held constant. On the contrary, scenario analysis is a method where more than one assumption is changed. However, both analyses do not say how probable that change is in the real time. There is a theoretical example about the real option. Usually, the real option method gives choice whether to pursue investments, whether to abandon it, or to delay it. These opportunities are rights to change, not obligation. They give the right for the managers to engage and to follow the real option or not to do it. A theoretical example will be explained with the investment that Canon made to acquire Toshiba Medical Corporation in 2016 by spending $6.1 billion. There was estimated that there is probability that the market is favorable by 70%. On the contrary, there is a probability that the demand may fall, which is 30%. In the first year, if the investment is probable, the company will have a return on investments of around 200 million, which gives it the option whether to leave it as it is or to further invest into expanding that investment. Or, on the other hand, if the market is not favorable, it will generate a return of 50 million. Again, the company has two options, whether to pursue a real option or not. It can abandon the investment by incurring dismantling costs, legal costs, redundancy costs, or to leave it as it is. The real option value of the whole project was estimated to be 2.70 billion. Again, this is a theoretical example where the calculations are provided into the appendix. My recommendation for Canon is that the company should consider the political risk from the USA-China trade war, as it can devaluate or depreciate the currency, which will affect the profits of the company. Another major threat that Canon may face is that smartphones are taking advantage in the camera industry. In order to cooperate or to manage this threat is that the company may want to form partnership with mobile producers. For example, it can create a partnership with Samsung for Samsung to use the cameras produced by Canon in the smartphones they produce. Another recommendation for Canon is that the company should consider the global economic recovery because of COVID-19 pandemic, as it is actively engaging in mergers and acquisitions. It may want to slow down the pace until the global economy recovers. Another problem is that the company should always ensure that the quality of its products is perfect, as it has competitive advantage with quality and prices. And for example, if the quality of product is bad, it may lose customers. It may challenge the customer's perception as there are enough substitutes on the market. Moreover, it may reduce its prices during the periods of the economic recovery because compared to other brands, for example, Panasonic, Toshiba, or more, Canon seems to be the most expensive one. Thank you very much.